and welcome to TBR's quarterly Telecom Vendor Benchmark review. My name is Allison Crawford, and I will be your host for today's session. Over the last year, we've engaged with our readers through our quarterly webinars to provide you with additional insights into the state of the networking and mobility market. We have good questions and discussions with you, and we're excited to continue to connect with you as the NMP practice grows. Before I turn this over to Mike and Chris, there are a few housekeeping items I'd like to cover with you. First, we will be recording today's session and posting on our YouTube site, TBR channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please any questions or comments to the Q&A or chat function. Mike and Chris will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to them at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Now I introduce Research Analyst Mike Soper and Senior Analyst Chris Antlitz from the Networking and Mobility team here at TBR. Michael is the primary author of the Telecom Vendor Benchmark, and Chris has been covering the telecom infrastructure services market for the past 5 years. This has been instrumental in assisting our clients to improve their strategic go-to-market plans and improve performance. And with that, let me hand this over to Chris and Mike.
Great, thank you. So before we delve into the results from this past quarter's vendor benchmark, just want to go over an overview here of what's included in this product. It covers within vendors, all the leading guys, all the logos are on the bottom of the slide. So the usual suspects, Cisco, Ericsson, Accenture, and then some of the smaller players in this space, who's more on the core P side of the business, and they're not in the RAN and some of the other businesses that we cover here. But they're still a key component of this report. What we do each quarter is a bottoms-up report on each of these vendors, and it is based on their earnings. And what we do is synthesize all major news events from the quarter. We talk about changes in strategy. We talk about key developments. We talk about revenue growth, margins, strategy. A variety of different topics are addressed in those reports. And by the end of the quarter, we take all those reports, we benchmark that data. Benchmark each of the 11 vendors against each other in key categories, and who's leading, who's not leading, and why. And this report we're going to get into is the synthesis from the 3Q12 vendor benchmark, what happened in that quarter among these 11 vendors. So with that, hand it over to my colleague, Mike Soper, who will start going over the results.
And thanks, everyone, for joining us today. During today's discussion, I'll be addressing some of the key trends we're seeing in the telecom infrastructure, applications, and the telecom infrastructure services markets. So let's get started. So the big trends we've seen in the third quarter are, one, vendors are really struggling to grow revenue in an infrastructure market where the legacy technology demand has really took off, and European operators have cut back on their spending habits. Two, OSS BSS is driving the applications market, especially for large vendors. And number three, Ericsson is widening its leading position in telecom services as competitors like NSN and Lucent downsize in some of the low-margin managed services, and Huawei and ZTE are still working to scale up. With the infrastructure market, which is going through a rough patch, like I mentioned, and that's really due to the legacy technology experiencing a steep decline in demand. On the bright side, vendors are sustaining some pretty good growth in LTE sales, Ericsson is really capitalizing on LTE demand. They own LTE deals with all 4 Tier 1 U.S. operators, and we expect them to continue to outperform other vendors in the LTE space, especially as the Sprint Network Vision contract continues in 2013 and T-Mobile's LTE contract really ramps up. But maybe the biggest beneficiary of the upswing in LTE has been NSN, seeing their gross and operating margins expand in 3Q12, and that's thanks to their scale LTE deployment contracts with the players in Japan, SoftBank and KDDI, and all 3 in South Korea, all 3 Tier 1s. Over in Europe, with operators, they've delayed LTE investments, but they're going to need to start spending in 2013, 2014, 2015 in order to keep pace with the smartphone adoption going on. But really, the next big wave of LTE deployment is expected to be TD-LTE in Asia. China Mobile, they've really become the chief advocate for TD-LTE. And in their recent trial, they've used equipment from all the Tier 1 vendors, and their massive trial is actually bigger than most live commercial build-outs. So all their trial calls for the deployment of 20,000 base stations initially, and then the commercial rollout of 200,000 base stations by the end of 2013. This illustrates infrastructure revenue and revenue growth in 3Q12. You'll see most vendors experience falling revenues, and those that actually found growth were stuck in the single digits. This growth is really slowing as the company reaches maturity in its core telecom market. Though while its growth rate is starting to normalize a bit, it's still expected to outperform its peers on the whole. It's taking some market share from Alcatel Lucent and Nokia Siemens, particularly in Europe. In infrastructure space, we really expect it to remain highly competitive as Europe expands, Huawei expands deeper into Europe. It pursues market share gains and acquisitions, and Samsung grows its LTE market share. Additionally, we've got the restructurings going on at NSN and Alcatel Lucent, impacting their businesses. And they sold their fiber and optical businesses, while Alcatel Lucent, they've yet to identify assets for divestment, though the enterprise and the subsea cable businesses are likely to be divested. We highlight some of the leaders and laggards for 3Q12. Ericsson's weak revenue and margin performance relatively in 3Q12, and that was primarily caused by lower network infrastructure in a lot of their key European markets. The network sales in North Europe and Central Asia, Western and Central Europe, and the Mediterranean regions steered their year-to-year declines of 30%, 40%, and 11%, respectively. Activity picks up in these regions. Ericsson will start to face greater competition from Huawei as they've made some really significant inroads in the region since the 3 investment cycle a few years ago. However, for now, and we expect this to continue, Ericsson will be the LTE leader by revenue. And in the burgeoning heterogeneous network space with Bell-Air under its wing, Ericsson is much further along than its competitors. Alcatel Lucent, we've got their demand for wireless and optical equipment remained pretty weak in the quarter. A lot of their kind of delayed network investments, especially in Europe again. Alcatel Lucent, they've also been pretty hampered by decreased investments in GSM, especially in China, and CDMA in the United States. On the bright side for them, we expect their wireline segment to continue to recover in 2013. It will remain in growth mode, and small cells will continue to gain traction. Over at NSN, they had slight revenue growth in 3Q12, which was a little bit surprising. They're mainly stemmed from their APAC operations, where NSN capitalized on the LTE opportunity in the developed Asian countries like in Japan, where they won with KDDI and SoftBank, and in South Korea, where they scored LTE contracts with KT, SK Telecom, and LGU Plus within the last 2 years. So we'll start looking at the application space here. So CEM, Customer Experience Management, that's at the forefront of vendor telecom software ambitions, but for right now, most of the revenue and growth is coming from OSS BSS deployments. Vendors without the RAN piece, companies like IBM and HP, they're going to continue to leverage their expertise in analytics and their broad portfolio of products and services to start telecom operators to expand their revenue opportunities, such as offering cloud services to enterprise customers. The applications revenue and growth graph, you'll know that Huawei leads in total revenue, and that may come as a bit of a surprise. But the success in applications mainly stems from the high number of network management system installments, which is a result of their large volume of network rollouts. Ericsson, for the second quarter, they had the highest growth in applications, and that's partially due to the acquisition of Telcordia, but they also grew organically because of for OSS BSS transformation. IBM also holds a very strong revenue position, and that's due to their focus on enabling telecom operators to evolve into cloud service providers. And right now they're actively expanding their analytics offerings by making some strategic acquisitions. So let's deep dive into the application activities of a few companies. We have Huawei, Ericsson, and Alcatel-Lucent. Now, they're not as advanced as competitors as NSN and Alcatel-Lucent on the CEM front. When they do come to market with their own version of CEM, Huawei will start to look to undercut the CEM pricing models of its competitors, much like they did in the infrastructure and the handset spaces. For now, however, Huawei's growth will mainly stem from their OSS BSS deployments. Now, they're focused on integrating their new telecom software assets into their support solutions unit in order to win a great number of OSS BSS transformation deals. They're integrating their Concept Wave acquisition and the orderment and product catalog management expertise with the Telcordia team. And while Telcordia provided a lot of these capabilities, Concept Wave's portfolio is viewed as a bit more advanced than Telcordia's. For Alcatel-Lucent, they went several quarters without any significant announcements about their applications enablement strategy. But in 3Q12, they brought the focus back there a little bit and rolled out a consulting practice to help operators with their API business strategies and created an open source API management platform to speed up application development for the areas. But in 2012, their chief focus, starting the beginning of the year, was the EM. And the company was able to pick up a win at Belgacom for its quality manager, and that's just a small piece of its Motive CXS CEM portfolio. In 2013, CEM, that's really when it's expected to ramp up. The IS market, that's in at the moment. Ericsson, Huawei, and ZTE, they're going to be starting to take business left behind by Alcatel-Lucent and NSN, particularly field-related contracts. Those companies, they've trimmed their portfolios and decided to focus on higher margin business. Huawei and ZTE, they're willing to take on this business despite the low margins because it gives them more influence within customer accounts and it enables them to cross-sell and upsell customers into some high margin products and services. So in the revenue and revenue growth graph, everything there, the market leader by a wide margin. Remain in a strong position than NSN and Alcatel-Lucent as those companies cut back and undergo their transformational restructuring programs. Both NSN and Lucent are paring back their operating regions and exiting unprofitable services contracts. Meanwhile, Huawei and ZTE remain locked out of the Tier 1 U.S. operators, and that hinders their TIS addressable market. So that's really what keeps Ericsson on top there. What's interesting in this graph, though, is if you look at the revenue declines at the professional service firms. So you Azure and HP, IBM, they were in revenue. They're being more selective in their consulting projects that they decide to put out for bid. And the projects that actually do get awarded are of a longer duration and converting to revenue at a slower rate. But going forward, we see only a short-term problem, since operators need for assistance in implementing some of their business models and obtaining operational efficiencies that will remain strong and fuel growth in the next few years. Diving deeper into some of the vendors' 3Q12 activity, we have NSN, Lucent, and Ericsson. After increasing their service revenues at a double-digit rate for most of 2011, NSN, their growth rate has really slowed dramatically in 2012. And that can be attributed to the selective approach to potential contracts as they look to ensure that they get attractive margins on these deals. Now, Lucent, they've been suffering from some abnormally low deployment activities. They didn't really benefit as much from the LTE deployments in some of the developed Asian markets, like Ericsson and NSN did. Ericsson, they've been more focused on protecting market share, especially in Europe, as they kind of deal with ZTE and Huawei and offering lower prices, especially on some of the lower value managed services. And they're able to maintain their market share here by entering into network modernization and transformation contracts with a lot of their existing customers. Wrap up here. We have an overview of the infrastructure, applications, and services markets in 12. A lot of the legacy technologies, you've seen declining demand for that, while LTE is ramping up. Vendors are really going after OSS, BSS transformation deals ahead of the CEM ramp up that we expect to go on in 2013. And services, Ericsson, defied its market-leading position, especially as NSN and Lucent decided to draw back from some of the lower margin managed services. And with that, I'll throw it over to Chris, and he'll give you an overview of our research agenda.
Thanks, Mike. So these are some of the common themes that we've read of the vendor reports the past few quarters. So things like customer experience management, Wi-Fi and small cells, services, and consolidation in the space. These are just some of the topics that are kind of overarching in the industry now. And we do talk about each of these topics for the vendor reports. So this gives an idea of what types of research topics we're looking into going forward, and what types of information is found in the reports that we write on each of the vendors, and how that information trickles up into the benchmark when we do our quarter-end assessment of what happened in the market. So I think we'll open up for Q&A.
Great. Thanks, everyone, and thanks for those of you who have sent questions through already. I'd encourage you to send any questions you may have on what we just presented right now. First question I think, you guys, is what are the chances there will be transformative M&A in this space in 2013, and if so, who will take part?
So, yeah, Michael, transformative M&A. We'll mean some in the software area with Ericsson buying Telcordia and ConceptWave. Ericsson's also buying some smaller services, IT consulting firms. They actually just bought one yesterday, Devo Team. And seen NEC acquire Burgess's BSS business. expect there to be some more like tuck-in acquisitions. Cisco's also been very aggressive on the acquisition front. They've bought a list of companies in the last few months. Meraki is one. There's a few other ones in the SDN space. Cloud. They've been very aggressive there. We expect that to continue. As far as really large deals, Nokia Siemens is still kind of on the block. They might want to, to private equity or another entity, as the two parent companies really don't want to hold on to that joint venture. Nokia Siemens has really come a long way in their restructuring efforts, and I have an evaluation on the company of about $5 billion. So they've really things around in the last year, and they're interested that list might be growing for them as the parent companies look to get rid of that company. Another company that is in a transition phase right now is Alcatel Lucent. They're really struggling with their finances, and there could be opportunities there for them to sell off some assets. There's a few small businesses of theirs that are up for sale, like the submarine business and their enterprise software business, the one that they didn't. That's not part of Genesis because they sold that separately. So, long short, I think there's going to be some smaller acquisitions vendors for some of the up and coming in areas. So things like small cells, more application type deals. Cloud will be another big one, etc.
We have a question about M&A. What effect will operator M&A in the U.S. have on vendors?
So, yeah, there's been some more consolidation. There's SoftBank taking a stake in Sprint. There's Sprint taking controlling stake in Clearwire. There's T-Mobile and Metro PCS also. There's a few mergers in the wings here. As far as huge deals, I don't really think there can be any. The FCC has been pretty basically drew a line in the sand with the AT&T T-Mobile deal, but not letting that go through. So any M&A in that space would have to be a tier 2 or 3 operator. Maybe Leap might be hired by someone. They're really struggling. Sure who Metro PS, there's been talk that they'd be a good fit, but it depends on the price. In the past, they've asked for way too high of a price. What do I have on vendors? Well, it does run to shrinking the pie for how much they're spending on overall CapEx. It's basically, by getting the synergy there, the operators are maximizing the utilization of their existing infrastructure, and that could be negative for the industry as a whole, for the vendor community. But the vendors that are well positioned and have leadership positions with those accounts will have opportunities, we feel, to displace some of the smaller vendors. So, for example, a company like Tellabs, they've been displaced quite a bit from their AT&T and Verizon accounts. As Ericsson has moved in, as Cisco has taken more of that business. So we expect those types of market share shifting to continue.
Okay, another question. Can you provide some more color on NEC and Netcracker?
Yeah, so Netcracker is a big in OSS, and NEC can say, well, we want an end-to-end portfolio. So they went out and they negotiated with Convergys for their BSS unit. Now they have an end-to-end OSS BSS portfolio, quite competitive with some of the more established leaders in the market, like an Amdocs or an Ericsson. Netcracker kind of flown under the radar, and NEC hasn't really talked much about what they're doing with that unit. What we do know is that there is some growth in that business. NEC prefers to keep Netcracker a still-owned subsidiary. It's taken a while for them to integrate some of the the operational aspects with our NEC telecom businesses. We do expect the convergence and the NEC entities to start working together more and get some action in the OSS/BSS transformation type contracts to go for some of the larger ones with Tier 1 operators.
The last question that we had come through so far is, can ZTE rebound from its recent poor performance that are restructuring similar to NSN and ALU?
So ZTE, they are going through restructuring right now. It is in many ways similar to what NSN and ALU are doing. Much like Huawei, ZTE has stumbled. They had several quarters of disastrous results. Their margins took a dive. They lost market share in a few segments. They're really in a transitory period right now. And I don't know if anyone saw the thought leadership piece we put out on that credit line that they won, that $2 billion credit line. We did some research there and uncovered that that money is going to be used to turn around, to streamline their internal operations, to trim some of their portfolio, to go into other markets that are much stronger than they had in the past because they didn't have resources and the wherewithal to get in there. So restructuring in the sense that they are placing less emphasis on CDMA, some of the legacy technologies. They're trying to get more into the TD-LTE. They're trying to get more into managed services, some of the high-value services. But, there's still that's going to be a process. That's going to take them through this year to get back on track, we feel. Quarters for them to get to align their resources with what revenue that they're getting is. And they need to really address their cost, their OPEX, because their margins are just really not competitive. They're an underperformer on margin front.
Okay. Any other questions come through? So with that, I'd like to thank you, Mike and Chris, for your time, and thanks everyone for sending your questions along. There's a couple quick things I want to let you guys on the phone know about. January 31st, we'll be broadcasting our TIS webinar with Chris Antlitz. On February 12th, we'll be doing our Network Infrastructure Services webinar with Scott Dennehy. And on February 20th, we're actually doing a deep dive into the implications of ZTE's $20 billion credit line. So if you'd like to register for those, you can reach out to us and get that information. You can also follow Mike, Chris, and TBR on Twitter at the handles listed here for more information on what they're seeing happening in the market, as well as other research agenda items that we have coming up. And to encourage you again to check out our pages on SlideShare and YouTube that I've posted here for you guys to be able to look at. Before you sign off, when you're leaving the webinar, we are conducting a short survey of today's webinar about the presentation as well as the presenters. We'll be using feedback to help improve our presentations from quarter to quarter. So if we don't hear from you guys in the next couple of minutes, we look forward to talking to you guys again next quarter, and have a great afternoon. Thanks, everyone.